It's May 1982, and the whispers on Wall Street are growing louder and louder. Boone Pickens, head of Mesa Petroleum Company, is going to make a move to acquire Cities Service Company, better known for its Citgo brand. No one is quite sure how the much smaller Mesa is going to pull this off, or when it will happen, but this being Wall Street, people are literally betting on it. Pickens can feel the clock ticking. Soon, everyone will know everything. After an advanced meeting with bankers, he explained to a colleague that they've just met with a room full of people and that they all have one friend they think they can trust. Cities, of course, doesn't wait for confirmation to begin taking measures, and the move they settle on is something that has never been seen before. On May 28th, before Pickens can strike, Cities announces that they are going to make a tender offer for 51% of Mesa. The predator becomes the prey. A little bit of background on Boone Pickens. He's sort of the quintessential oil man at this point. He's a daring and cutthroat capitalist who came from nowhere, and one day he's running a company with $2 billion in assets. Think the main character in There Will Be Blood. It's not an accident that Pickens gets name-checked in one of Saturday Night Live's best skits about a savage oil baron bent on the destruction of his enemy.
One man came close to breaking me, H.R. Pickens. He did not succeed.
Anyway, his hard-charging nature is what leads him to think that acquiring city services is not just possible, but a good idea. The fact that Cities has 20 times the sales as Mesa is irrelevant. He believes that Cities is mismanaged, a failure that is reflected in the stock price and led to a situation where Pickens realizes that it would be more expensive to go out and explore for oil versus just taking over cities and suddenly having access to all of their oil. By striking first, Cities creates a huge problem for Mesa. First, Mesa hadn't even figured out who their partners were going to be in their takeover attempt. That was one of the problems of being smaller. Boone knew he couldn't pull off the deal with just his own money, so instead he was going to recruit partners to help buy Cities shares, then he was going to pay off those participants with reserves from the oil after he had control of them. But bigger than that was time. After a company makes a tender offer, meaning they tell shareholders they're willing to buy their shares at a certain price, assuming enough people are willing to sell, there's a 20-day waiting period before the transaction can actually take place. Cities' offer was official, so their countdown clock was ticking. Mesa didn't even have the partners in place, so even if they got them for the next day, they'd still have a problem. Cities could acquire Mesa before Mesa could complete their offer, and since Cities would then have a controlling stake in Mesa, they would just decide that Mesa didn't want to buy Cities anymore. Pickens takes his team to New York to start the fight, since back then you actually had to be on Wall Street to have access to all the bankers and lawyers you would need to get into this sort of mix-up. And they start trying to figure out how to win from their disadvantaged positions. As Joseph Nacera writes in his piece, Time to Make a Deal, which was done while he was embedded with Pickens during the proceedings, and the link to that is in the description, they had gone to the mattresses. Their first move is to make what's called a bear hug offer directly to Cities management. This is supposed to be an offer that's almost too good to refuse. The idea is that management has a fiduciary duty to its shareholders to maximize shareholder value, and they can face all sorts of legal challenges further down the road if they're turning down a deal that's spectacular. The offer fails, of course, but it serves its purpose of alerting the financial media that Mesa is not about to go down without a fight. It also gets Cities shareholders thinking about what they might take in a tender offer, since it's inevitable that one is going to be made at this point. Before Mesa can make their offer, though, they still need to find their partners, and here they ran into another major problem. Just when they thought that they had two companies lined up, one of the major players pulls out. See, Cities had been calling around and telling Mesa's potential partners that if they tried going on the deals, that City was going to tender shares for their company too, just like they were doing for Mesa. At that point, Pickens decided, screw it. He was going to go it not alone, but alone, just to start. One of his team members reminds him that a deal the prior year happened where a company had made a tender offer only intending to buy 15% of the company, but shareholders of 50% of the shares said that they wanted their shares in the deal. And a third party ends up stepping in and they say, hey, you know what? We'll buy 50% of the company. Mesa was going to do sort of the same thing, except they were going in with the intention of having their tender oversubscribed in the first place, and then they'd use that as proof to find partners who would buy the rest of it. This is described as something that nobody had ever tried this before. From now on, the Pickens team would be flying without instruments. Mesa makes their offer. Now, with this, if you build it, they will come strategy set in motion. They've done what they can do on the partner front, but they are still 4 days behind. They need to come up with a strategy to get ahead on time. And they do. Someone on the Mesa team realizes that if another company makes a play for Mesa, then it means the 20-day clock has to get pushed back by 10 days. There's an opportunity there, but Pickens really needs to thread the needle. They can pitch the arrangement by saying, don't worry, you won't actually have to put up the money, but they can't guarantee that's what will happen. The third party could be forced to buy a stake of Mesa that is then suddenly under the control of cities. Somehow, T. Boone finds a guy who's willing to play that game of chicken on his behalf, named Tom Brown. So T. Boone is now about to take back the time advantage. And then, all of a sudden, Gulf Oil enters the picture. It turns out that cities had heard about Tom Brown, and they got nervous. They decided that rather than continuing the fight, they were going to call in what's known as a white knight. Basically, when you're about to get taken over by a hostile party, a white knight is someone who you like better, and you get them to take you over instead. So you're not an independent company anymore, but at least you're kind of on friendly terms with your new boss. Now, in a normal world, that's probably the end of the story. That's plenty of excitement for any one man or any one business. T. Boone even thought it was over. He called off the move from Tom Brown, and then him and his crew go and get drunk in New York City. But this is the oil world. The next morning, Pickens gets a call. Yes, Gulf is going to be buying cities, but cities has decided that it might as well still buy Mesa. Nocera describes this action as one of blood revenge. There's not going to be enough time now for Pickens to get Tom Brown to have his team drop the papers and make the saving offer. Instead, he decides to bypass everyone at Cities and go straight to Gulf. He calls Chris Lee, the president of Gulf, and someone he considers a friend. He gets Lee to cancel the offer by telling him he's going to raise antitrust issues and also by just telling him to be a good guy. So Boone gets exactly what he wants out of the call, but he also gets the sense that something is wrong, and his intuition leads him to get rid of a small position Mesa had taken in Cities before the whole thing started blowing up, rather than selling it to Gulf at their higher price they were offering in the tender. Mesa nets $24 million on the sale, although they had spent $12 million mounting their defense in New York. Still, not bad. And then the finale. Pickens was right. Gulf drops their bid, saying they're worried about antitrust activity from the government that might block the merger. Instead, Occidental Petroleum comes in and buys Cities for $1 billion less than Gulf had offered. And Pickens, sensing weakness from Gulf, all of a sudden buys up 11% of that company and launches a takeover attempt on them. This is the same company run by the same Chris Lee who just did him a huge favor by protecting him from Cities. Pickens comes on so strong and so hard that Gulf, one of the largest companies in the world at that time, has to find a white knight of their own and get rescued by Chevron rather than facing down Pickens. This time, the increase in share price on Mesa's initial investments totals $750 million. Pickens had acquired the reputation of being a corporate raider whose skill lay in making profits out of bidding for companies but without actually acquiring them. But it was some skill. His company was a small fish that all the big fish were afraid of. A board member of Exxon in the mid-'80s even admitted that mostly all we talk about in board meetings anymore is Boone Pickens. Thanks for watching, guys.